We're going to go to Omar. How you doing today, Omar?
I'm good. How are you?
Another day in paradise.
Oh yeah, it's definitely very very up and down though. Up and down, that's for sure. My question is, I got into direction funds about a year ago,
Uh-huh.
and I started off with the semiconductor because I'm really optimistic about the Internet of Things, and back then there was the whole Bitcoin thing going on, although I'm not much of a Bitcoin fan.
Yep.
I traded it back in the day, and I made a little bit of money, and then of course the mini crash happened,
Yep.
and I did not sell. I held at where I was at 168, and recently, with the Taiwan earnings and expectation of lower expectations with the earnings and all that. My question is, should I pull out now or should I buy more until dollar cost average my price?
You're at 168.
Yes.
Okay.
Well, I'm at 168.
What was your original plan to stop out?
Well, I was hoping for another higher high.
Yeah, I know, but if you were wrong, where were you going to stop out and say, I can't take the pain anymore?
I'm really long-term on this, so my strategy was to just simply dollar cost average it out till it goes back up.
So at the moment, you don't have a full position.
I have a part position. I pulled out some of it, but I have about 20 shares in it. 20 shares, yeah, about 20 shares in it.
Okay. Here is the first thing I do. Whether you're investing or you're trading, there should be a stop. And you should do it and start to think about it when you start the trade, not long after it, because far too many people do it. Now, here's my fundamental call on semiconductors. And this goes into Apple. I looked at a lot of articles over the weekend. I've been talking about it in my Tech Insider for a while. We're moving to 5G. That means that over the next year, can you hold on through the break?
Yeah, of course.
Okay. Over the next year, we're going to make that start to make that transition. So what happens? Well, we talked about it a bit last week for a company. But what happens when you're doing transition? You generally quit selling the stuff that you have now, and everybody starts waiting for the stuff that you're going to sell later. We'll talk when we come back. Still have Omar on in Canada. Are you there?
Yes, I'm here.
Where are you at in Canada?
I'm in Hamilton, Ontario.
Okay. Well, Hamilton. Okay. It's been a long time since I was there, but I went for every 2 weeks for like 10 years. But our office was in Markham.
Oh, yeah.
So I'd drive from the airport to Markham, check in, go through meetings, go home the next night. So I went down and saw the Space Needle, but that was about it. Not the Space Needle, but the tower. But
Oh, the CN Tower?
Yeah.
Oh, nice.
Yeah, we were in the video business and television business, so they knew everybody down there at the tower. But interesting. Okay, so here's the first thing. Whether you're an investor or whether you're a trader, the first thing you got to do is put a stop in. And whether it's a mental stop to at least start scaling out of it, you got to know what you're going to be wrong. Now, here's the problem with these leveraged shares, and that is that you're going to have some decay in the price no matter what. You know that, right?
Yeah, I understand the decay, especially in the volatile corrections in volatile markets. I understand that.
Right. The way that they get 3x on these is they're in the futures market.
Yeah.
And all you need this thing to do to go lower is the SOXL go sideways. So you're in a problem. Now, my fundamental call is that everybody's getting ready for 5G phones. My guess is it's going to start somewhere around this fall. to the first couple of months of next year. But I was talking about Osborne Computers last week, I think maybe Wednesday or so. They announced a new computer about 9 months before it was ready. And of course, no one wanted to buy the computer they had, and they went bankrupt. And this is the problem that you have when everybody in the world knows that there's going to be new stuff coming. And the biggest part of electronics today is mostly cell phones and actually smartphones. So you got this time here where everybody's getting ready to make orders, but they're not buying any of the old stuff. And so the semi business is kind of probably going to be fairly tough through the rest of at least into September. So the problem you have is this thing could just go sideways and you'd still lose your shirt in the socks just because it's a leveraged product. And that would be my fear. What you need to do right now is figure out when you would sell the rest of your shares no matter what. And could you get some bounces and maybe get out of this? I think you could. But this semis are probably going to be one of the weakest parts of technology through the end of the summer, I would think.
And would I be able to, you think, dollar cost average my price, my initial capital? Like if I add more and get out on a bounce?
I'm not a fan of adding to a losing position.
Okay.
You know, if you've got more money, then look for somewhere else where the sector is better performing. Does that make sense? Putting your eggs in the same, more eggs in the same basket, if you were wrong to begin with, just means generally you're more wrong. Does that make sense?
Other?
Are you still there?
Yeah, I think there's a disruption in the connection.
Okay.
Yeah, so I would say about 110, would you say it's a fair exit?
Well, actually, this thing can fall apart if it gets below 117.31. Your next stop is 84 bucks.
Oh.
So what you got to do is figure out that you don't, you know, at 102, there's a gap there that might be a little bit of support at 102, but at 102 you end up back down to 84 bucks, and that's why I don't add to a losing position.
Okay.
I would say make sure that you're in something else, and probably something fairly far away from the semiconductors, so that if all of technology gets pulled down by these, you don't get hit by it. They're a very small amount of stocks that won't be dragged down probably by these, maybe more software-oriented stuff, right, instead of hardware. So you want to be kind of far away from this sector. I would put more money in something else that you find that you like. There's nothing wrong with diversification. In an individual stock or an ETF, I never want to see more than 15 or 20% of the money I have in a single one of them. And I don't know if you have more than 20% of your investing capital in this thing.
About 18%. It goes down every day, right?
Yeah, well, yeah.
Because I'm not buying more.
Yeah, okay. Just don't double up in a bad position is one of the first rules you have to learn. I know I'm going to be, no matter how good it looks, I'm going to be wrong a certain amount of the time. And it's the best way to take that part out of it is just to put in stops. Have you ever read Trading in the Zone? Is that a yes?
No, I haven't read it, but my fear over here is that I have put stops in the past about 5 to 10%, but due to its the very nature of its volatility, sometimes the stop gets hit and the price bounces back from the support just below it.
Yeah,
sometimes.
The way I do all the stops in my newsletter is if it closes below a certain level, then all I have to do is look at, at 358 each day, with a couple minutes left and see, is this thing going to close below my stop, and then I can get out of it. Because I understand the part now with robotics and high frequency traders, you put an order in, they're probably going to get it. They'll run the market of anybody that puts orders in today. So you just kind of have to say, I'm going to, every day at 3:58 with 2 minutes or 5 minutes left, I'm going to look at it, and if this drops below my stop, I'll go ahead and sell it. But it's one of those things where if it goes below it at noon, closes back above it, you can stay in the stock. So you can put your stops in just saying, hey, I will sell it if it goes below this level. I'll see how it trades during the day. I'll take the risk of one day, but I don't want it to go below this price and close below this price, because if it does, it's more likely to go even lower, right? So you can do stops that aren't physically in. And generally, the problem is that if you do put in a stop, I know that they'll just go and run it for 5 minutes and take you out, and then the stock pops right back up. But if it can't, if they can close the stock, if they can't close the stock lower, that's a pretty good sign. So wait till the end of the day, get some stops at least mentally in your head, and figure out how you can get out and get somewhere else. Don't throw more money after bad money. We'll be back after this.